Not surprisingly, last month trading activity among retail investors hit the lowest level in more than 3 years, according to the firm Vanda Research. Our next guest wrote a feature story in this weekend's Wall Street Journal looking at the retreat of amateur investors. Here with us now, Gunjan Banerji. She's the lead writer for Markets Live at the Wall Street Journal, as well as the CNBC contributor. Gunjan, welcome. Good to have you in the house with us.
Yes, great.
Where did all those retail investors go? Did they just get scared off? Did they decide that, well, now bonds are paying more, I'll put my money there? What?
Tyler, I really think that T-bills, I-bonds, money market funds are the new meme stocks. What we've seen is a lot of individual investors are hanging on, but they've really shifted their strategies. We're seeing them put their money into cash. For the first time in a while, cash is yielding something, 3%, 4%. They're putting their money into T-bills, again, yielding 4%. So, some investors I spoke with for this article did say, cash is yielding something again, I'm going to put my money there instead of trying to buy the dip, which a lot of them have gotten burned on over the past year.
It's remarkable that last month, when the meme stocks reflect, so if retail activity was at its lowest since Jan of 2020, who was in these stocks? I mean, and what was it some of the same community, or what do you think's going on here?
So I do think we saw some retail investors come back into the markets in January, but I think it's really important to note that while a lot of them have left the markets, overall activity is still above 2019 levels. For example, I was looking at some data in the options market, which showed that retail investors made up around 22% of options activity. So that's below the 27, 28% peak that we saw the past few years, but above 2019 levels. And we're seeing a similar trend play out in the stock market.
I want to ask about Robinhood, but I also want you to tell us a little bit, sort of the thumbnail version. You have a very interesting story about a guy who made a lot of money, and you verified that, in fact, he made $1.5 million or something like that. But he blew it all. And one of the reasons he blew it all was that he kept chasing his losses down.
That's right. What an unbelievable story. And I'm really grateful to this individual investor for opening up about the emotional aspects of trading, which I think a lot of investors have been confronted with. And yes, he amassed around $1.5 million in 2021. And, he started taking a lot of leverage, is what he told me. He started, making riskier options.
Was he an investor or just a bettor?
It's an interesting distinction. He did get into
because
sports betting.
Because he got into sports betting to try and recoup some of his market losses.
Right.
Not
This is probably sounding familiar to a lot of people who are watching right now.
Right, but that's what happened over the past few years, right? It just seems so easy to make money. So I think people were like, let me get into the options market. Let me buy these momentum-based stocks. Let me get into sports betting. I think those things kind of started to seem a little bit similar. And he had some bad bets, and what he told me was he did start chasing those losses, and he started taking more risk to kind of recoup those losses. And he, of course, also started spending a lot. So there were a few things going on there, but I think he is an extreme example of a lot of what we saw during the pandemic, where people just got into riskier and riskier trades. Like he was trading options contracts that would expire within hours.
Wow.
And buying and selling them.
Right. And if you think that everything you touch turns to gold, why wouldn't you? Why would you settle for 10% when you could get 40? And then, I mean, again, to me, it all comes back to the Fed. When you put this much, the Fed, the fiscal government, all of this stimulus into the economy, yes, you can win at the stock market. You can win at sports betting because you get so many incentives when you can win at everything. And now we're seeing the reversal of that. So it's fascinating to watch markets try to kind of bring this narrative back to life in the past 5 or 6 weeks or so. And I don't know if there's anything we can glean now from the staying power of that at a time when the conditions would seem to be very different supporting that.
Totally. And, one investor I spoke with said, I was trying to buy the dip early last year, and I stopped when I realized how serious Powell is about raising interest rates, because how many times can you get burned buying the dip before you just say, I'm going to get out of the market?
What, if anything, can we infer from this change in behavior about Robinhood, which rode the individual investor, the trader trend, the meme stock trend, to such prominence 2-3 years ago?
Well, we saw monthly active users at Robinhood in the third quarter, hit, I think, the lowest level since the company went public. And they've never reclaimed those highs since they IPO'd. And I think that tells you everything you need to know. They're the ones that kind of made, trading cool. They made trading easy. And I think some of those
gamified it, as some would say.
They did. And I think that's reflected in some.
It's the same thing in your reporting. Did you find that the same thing was being said by discount brokerages or brokerages like Charles Schwab or Fidelity and so forth? Are they seeing the same kinds of declines in trading?
So that's a good point. Morgan Stanley and Charles Schwab have seen average daily trades decline to some of the lowest levels in 2020, though they do point out that it's above 2019 levels, right? So you are seeing some investors stick around. And what brokerage executives have been telling me is that some people are opening accounts to take advantage of these high yields on idle cash, like Interactive Brokers offering 4%. Their founder told me some people are making accounts to take advantage of those yields.
Yeah.
Makes sense. Bonds are back, baby.
Yeah, that's what we just learned. Yeah, right?
Baby.
All right. Gunjan, thank you. Nice to see you again.
Great to be
so
here.
Much.